Hello, I'm Allie Swafford, President of Prosperity Partners Wealth Management. I'd like to address with you 7 key factors that are affecting our world and our markets today. It's fairly detailed and it's fairly fluid because, as you know, things are changing very rapidly. So let's start with the first one. This is not 2008. Most all of you were alive during that period of time and remember that that was a financial crisis. The immediate future is relatively uncertain today, but it's fairly certain that within the next several months, this situation will be more under control and hopefully even resolve itself. In contrast, the financial crisis was a period of great uncertainty where both short and long-term behavior of the market and the economy were complete mysteries and required remedial attention for years afterward. So that's the first point. It's not 2008. Second, uncertainty caused by new cases and no clear pathway forward will create market volatility. According to Johns Hopkins University, there is still so many people that have the virus that have not shown any symptoms and have not been tested. Of course, that means that there will be many more cases than have been reported. The level of uncertainty will continue to create chaos in markets, just plain and simple. Significant increases in cases have occurred over the past week. This morning it was reported that now we have the virus in all 50 states. It's probable that many businesses will close. Again, it's quite difficult to predict how the virus will fare during the next several months. With these multiple unknowns and how the virus will respond to changing temperatures, whether people that have the virus can cure the virus for now and will they get the virus back again, these unknowns will create volatility in the markets. Certainly, headlines are a major concern. When you don't have clear direction, it becomes apparent that investors are very prone to headlines that come out, and of course, headlines every day are all over the map. Instead of calmly determining the long-term risks of their current situation, investors are basing their trades on emotion instead of on numbers. This has caused significant market volatility, and just last week, the Dow closed on Thursday with a one-day drop of almost 10%, 9.99%. Of course, what happened the very next day on Friday, the Dow also had one of its largest point gains ever, rising 9.3% in the last 30 minutes of the market. Until there is a clear path forward from the present crisis, we're going to have this volatility. Now, what will it take? Well, a sustained decrease in cases, a sustained decrease in deaths, or the creation of effective and trusted vaccine. Until then, be prepared for almost anything. The coronavirus has affected businesses and a technical recession may be coming. As of March 17th, when this data was put together by a horse's mouth, virtually all businesses had been affected, most significantly hospitality. People are canceling reservations in cities such as New York. Restaurants and bars are shut down. According to the Wall Street Journal, restaurant traffic is down as much as 60%. While other larger businesses are able to offer paid leave or rely on their profit margins, smaller businesses don't have that capability. It's worth noting that according to the Bureau of Labor Statistics, only about 29% of workers can actually work from home as has been requested. So having said this, we may be headed into a recession, but it's likely that any recession we have would be short-lived and would merely qualify as a technical recession. In addition, remember that January and February of 2020 were sound, and the banking system is also fundamentally sound, unlike it was in 2008. As a result, when we see third and fourth quarters, we could emerge as positive, even though the second and third quarter will have its challenges. So as tempting as it may be, our fifth point, don't sit it out. The old investment mantra is to buy low and sell high. In theory, it's pretty simple. When we purchase stocks at low prices, we're buying more shares. If we now sell, you may have heard the adage, you can't catch a falling knife. This strategy is much harder emotionally than it is logically. So let me remind you that if we look back over the past 15 years, if you bought into the market with $10,000 in 2004 and sold out on the last day of 2019, your $10,000 would have turned into $26,418, a 9% annualized return. Considering that 15-year period contained a significant recession, a 9-year return is no small feat. If you mistimed the market and pulled your money, missing the 10 best days of the market, you would have only had a 4.1% return, less than half the return. So the time to get out may have been 3 or 4 months ago, or even possibly 6 weeks ago, but not now. So if you are looking to take advantage of something, maybe this is the time that you could do some tax trading, some gifting, some Roth conversion, or many other planning opportunities. And please feel free to call our office for some ideas for your particular situation. The sixth point is about bond spreads. Now this gets a little technical, but the U.S. corporate bond spread today is much lower than it was in 2008. The spread indicates how risky investors think the market is. Usually the corporate bond spread is around 4%. The spread is around 700 to 800 basis points, a significant deviation from the norm, but still nowhere near the financial crisis, at which time it was a 21% point spread. A widening bond spread indicates trouble ahead for the market. A tightening bond spread will give us an all-clear signal that we are looking and watching for. The seventh point is the rebound will be coming before you know it. While the coronavirus has sent us into a bear market, it's important to remember that typically the market rebounds from epidemics quite quickly, particularly when, as here, the underlying fundamentals are strong to begin with. I'll cite 3 examples. Let's talk about SARS. The month that SARS ended was April of 2003. The S&P's 6 months performance after April of 2003 was a 14.59%. The 12 months for SARS was 20.76. The swine flu ended April 2009. The 6-month return was 18.72. 12-month return 35.96. Most recently, the Zika. It ended January of 2016. The 6-month return following January of 2016 was 12.03%. The 12-month return 17.45%. So what are we saying in these points is that, yes, this is very difficult. I often tell people, put on your seatbelt, we're going for a ride. However, the economic information, and by remaining calm, we can get through this together. Now, the medical community has provided us with a few tips. I'd just like to pass those along. Many of you are familiar with some, but possibly some of you have not thought of others. The first one, which we've all heard, is meticulously wash your hands. Wash your hands thoroughly and wash them often. Use an alcohol-based hand sanitizer. The second one is have 6 feet as a distance that you might be between yourself and others. COVID-19 virus spreads through droplets. They can move up to 6 feet before gravity brings them down. So if you are around people, do try and keep your distance. The next one's hard. Don't touch your face. This is a learned skill that you're going to have to practice, but don't touch your face. If you can, clean your doorknobs, toilets, cell phones, countertops, refrigerator handles as often as possible. If you can work from home, work from home. Don't go to gatherings such as sporting events, concerts. Of course, many of those have been canceled, but take heed of that. If you had a vacation planned, probably need to cancel if the date is coming up soon. You'll be saving many lives by just staying put. If there's a wedding, sorry brides, move it out. Other birthday parties and so on. Let's have all people be able to celebrate because we didn't spread the virus. If you're over 60, you should probably stay home. If there's a critical need, of course, go out, but as much as possible, stay home. And don't congregate in a restaurant or a bar. Going to work, going to bars, being around lots of people could put countless other people at risk. If you feel sick, stay home. I'd like to end this with the U.S. Department of Health and Human Services. Keep calm and wash your hands. We're here for you. This is Allie Swafford, President of Prosperity Partners Wealth Management.